Your daily TFMR podcast is brought to you by jmbullion.com, your number one most trusted online bullion dealer. Welcome back to your TF Metals Report podcast highlights for the week of September 12th, 2022, a week that began with a very sharp short covering rally in the COMEX precious metals. Biggest move in silver in quite some time, up $1.10 on Monday, September the 12th, all on speculator and hedge fund short covering. Now, would that hold as we go through the week? That was the question. I was out on Monday, so we did not have a podcast that day. We went into Tuesday anticipating the latest update on U.S. consumer price inflation. It came in hotter than expected. And that led to concerns that the Fed was going to hike even higher and longer than expected. So the stock market fell, gold fell, bonds fell, basically everything fell. The biggest problem here is the stock market. If it starts beginning to move down below 3,900, it could test its June lows near 3,600, and suddenly we could be in quite a liquidity crisis. So we'll watch the stock market closely all week, and that was one of the topics we discussed on Tuesday, September 13th. Look at the stock market today. Again, moving along smartly higher at 4150 on the S&P when the CPI came out. Closing down here below 3950. That is a more than 200-point drop. Goodness gracious. More than 5%. So it was up 1% before the CPI, down 4% after. Yikes. You want to see yikes? You want to talk about crash watch? Look at this little beauty I found at Zero Hedge. Somebody laying out the current decline in stonks with the decline in 2008 and 2009, the great financial crisis. The red line being 2008 and 2009, the current market in blue. Looks like it wants to go down, make new lows, try to bounce, and then crash. When? Well, by this measure, maybe sometime late this year. It'd be about time for a Powell pivot that I thought was coming about 6 months earlier. I don't know, we'll see, but this is a pretty remarkable chart, wouldn't you say? At TFMR, we've been worried all month that gold was on the verge of a breakdown. A lot of support near 1,700 and just below there. It's been tested on multiple occasions. The problem with that, every trader can see that support and might be wise to put some stop orders below that support. That's what happened in 2013, and when 1550 failed, gold fell $200 in 2 days. Got to be aware of that now. That was one of the discussion points back on Wednesday the 14th. Now again, a little washed out already at 36 on the RSI, but that doesn't mean it can't plunge sharply. And that's what I'm concerned about, and that's why we've been on Crash Watch. Your final chart of the day is the weekly chart. Again, there's this boundary, just like 1525 to 1550 was that support level for 19 months, 2011 to 13. Here you can see for the last 2 years, 1675 to 1700 has been that same type thing. So where would you look for support? You can almost see a little air pocket there. If you drop below 1680, all the way down to what, 1580? That would seem about right if it happens. A little $100 plunge down here, just like when silver took out 22 and couldn't get back above 22 and then fell quickly down to 19. That same kind of chart. Remember how silver broke out of that flag, that consolidation? I don't have it here for you today. Well, I'm sure we'll talk about it on Friday. You can see that same thing happening here. And again, that's not my fear. It's just my concern that it will. I am still waiting for this. I've been sitting on cash in my One Gold account thinking that this is going to happen. I may be wrong. I thought 2 days ago, maybe I was going to be wrong. But right where we are right now, such a weak trade today, and everything else we know, I still think this is a possibility. So just, again, as I keep warning you, be wary that this is, like I said, a possibility. One of the misnomers in the gold market is that gold follows inflation, just the stated rate of inflation. And that's not really true. The greatest long-term correlation for COMEX gold prices is real interest rates. Negative real interest rates, very good for gold. Positive real interest rates, not so much. An easy way to follow real interest rates is through the TIP ETF. That's an ETF of Treasury Inflation Protected Securities, and it goes by the symbol TIP. When the TIP goes up, that means real interest rates are falling. When the TIP goes down, real interest rates are rising. And so you can expect a very close correlation with gold prices, and you can see it on the charts that we discussed on Thursday, September 15th. Okay, and then here's this. The TIP. Been telling you, we've been talking about this for weeks. Look out how it has come down dramatically this year. Now, almost as much as it came down in the course of a month back in March 2020, or in 2 months in April and May of 2013. And what happened in April and May of 2013? Oh yeah, that's when gold crashed from 1550 and down. So anyway, we are all the way back to levels not seen for just kind of like about a 5-day period in March of 2020, but also where it bounced on multiple occasions, 13, 14, 15, 18, from the levels in late 18 where suddenly the stock market began to melt down and Powell had to begin to pivot and all that kind of stuff. We're back there again. The only thing that hasn't happened yet is that gold hadn't crashed and the stock market hasn't crashed. So let's plot the TIP with gold. Look at that chart. Now this goes all the way back to when the TIP was started in 2004. Now, gold in candlesticks, as you can see, again, was rallying all through the interest rate hikes into 2007, fell back from 1,000 to 700 in the fourth quarter of 2008, then went to 1,900. The TIP is in a blue line. So when I tell you it's not inflation, the stated rate of CPI, that digitized, financialized gold futures track, it's real interest rates. As real interest rates fall, the TIP goes up, and so does gold. As real interest rates rise, the TIP goes down, and so does gold. And how tight of a correlation is this? 90%? Like I said, though, the TIP has fallen, but the stock market hasn't been reflective of that just yet, and certainly not gold. And on Friday, September the 16th, COMEX Gold was able to recover after reaching a low down to 1660, but getting back above 1680 into the COMEX close and through the Globex close as well. Now that's important because that 1680 level in the front month has been a very important support level for the last 2 years, and we did manage to eke out a close above there. But we're far from being out of the woods. S&P closed below 3,900 at its lowest level since July the 17th, 2 months ago. So there may still be some liquidity issues, some stock market issues, particularly during the early week next week. And then we got to wait and see what the Fed has to say. The September FOMC will conclude next Wednesday. You'll get the Fed lines. You get Powell's press conference. Will they do 50 basis points, 75, maybe even 100? And what will Powell say about all this? And how will that impact COMEX Gold and Silver by the next time you listen to one of these TF Metals Report podcast summaries next Friday? Well, we'll just have to wait and see. But for this week, it's time to wrap it up. Thank you for listening. Please join us at TF Metals Report. There's no better online community anywhere on the internet, and it's just $15 a month. Now is the time to be a part of that community. Again, check us out at tfmetalsreport.com. Have a great weekend, everyone.